Hello, ladies and gentlemen. My name is Greg Michalowski, and this is the July 11, 2014 Daily Forex Report for Equities.com. Let's take a look at the major market news stories impacting the Forex market today. German CPI came in as expected at plus 0.3%. This equaled the preliminary report. This was a final report for the month of June. UK construction output was weaker at minus 1.1% for the month of May. This has led to a decline in the pound in trading here today. In Canada, the unemployment rate rose to 7.1% versus an estimate of 7.0%. The net change in employment was weaker at minus 9.4 thousand jobs versus an estimate of 20,000. However, the mix between full and part-time was a little bit skewed toward more favorable numbers, with full-time employment rising by 33.5 versus part-time employment, which fell by 43,000. The full-time employment gains, however, were the first gains in the last 3 months. So just kind of a payback, I guess, in the full-time employment in this month's data. Also, the Portugal situation seemed to be calmer here today, and I'm going to focus on that in our chart of the day. And I'm not going to talk about foreign exchange per se, or at least at the start here. I'm going to talk about bond yields, because what has bond yields have been doing in Portugal? Well, first of all, the fundamental story is that banks in Portugal are under a lot of pressure. In particular, Banco Espírito Santo, which has been mired in an accounting scandal, and yesterday it was announced that a coupon payment would be delayed. So that sent bond yields in Portugal soaring to the upside to about a level of 398.5 from a low of 3.59% just on July 4th. So over the last week or so, we've seen bond yields move up about 40 basis points. Now, in today's trading, we're seeing a dip down to the 386 level in those 10-year bonds out of Portugal. So there is a relative calm in the euro. Yesterday, however, was a different story in the euro. We saw the euro versus US dollar move to the downside as a result of this crisis, this debt crisis in Portugal's bonds. And you can see that the movement was sharply to the downside in trading here today. We did move back higher, but found resistance against this green line, which is the 200-hour moving average, also near the 38.2% retracement of this move to the downside. That's a Fibonacci level, and the combination of this resistance against the 200 and the 38.2 was too much for the market to take, and we started to rotate back down to the downside. Overall this week, despite the fact that the Portugal bond yields have moved up 40 basis points, the 1, 2, 3, 4, 5 for the week were not much change from last Friday's close. In fact, we're a little bit higher on the week versus last Friday's close for the euro versus US dollar, which kind of has me scratching my head. Maybe next week, if we can stay below these technical levels here, we can see a lower euro. I'll be looking for that. My name is Greg Michalowski, and this has been a Forex report for Equities.com. If you want to know more about Forex, please visit me on my site at gregmikefx.com. Good fortune with your trading.